Have you ever wondered why some stocks skyrocket while others plummet? Welcome to the intriguing world of stocks, an ever-evolving landscape of opportunities and challenges. The stock market, with its ebbs and flows, may seem like a daunting maze for the uninitiated. But with the right knowledge and insights, it's a world that can be navigated with ease and confidence. Understanding the market trends and individual stock performance forms the cornerstone of successful investing. It's not about mere guesswork or luck, but a well-informed analysis that plays a pivotal role. But how does one make sense of all the numbers and trends? How do we decipher the cryptic language of the stock market? This video is dedicated to unraveling these mysteries. We'll be focusing on a particular stock, shedding light on its past performance, present standing, and future prospects. We aim to provide you with the tools and understanding necessary to make informed decisions. Today, we delve into the world of stocks, unraveling the mystery behind their rise and fall. The stock market may seem like a labyrinth, but it follows certain rules and trends. Let's start with the basics. At its core, the stock market is a marketplace. It's like a giant global auction house where stocks, shares of ownership in a company, are bought and sold. But instead of auctioneers and bidding paddles, we have traders and electronic transactions. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people are selling a stock than buying it, the price falls. This is the market's way of finding the right price for a stock. Now, what influences this supply and demand? News and events play a significant role. Earnings reports, economic indicators, political instability, even natural disasters, all can sway investor sentiment and, in turn, impact stock prices. A positive news event can send a stock soaring, while a negative one can trigger a sell-off. But here's where it gets interesting. The stock market is also subject to volatility. This is a measure of the degree of variation in a stock's price over time. In layman's terms, it's the market's mood swings. High volatility means the price of the stock can change dramatically in a short period, making it possible for investors to experience significant gains or losses. Low volatility, on the other hand, means that a stock's price doesn't fluctuate dramatically, but changes at a steady pace over a period of time. So, while the stock market may seem unpredictable, it's not entirely so. It's a dynamic system that reacts to a multitude of factors, but it's also a system that operates on certain principles. By understanding these principles, supply and demand, the impact of news and events, and market volatility, you're better equipped to navigate this labyrinth. Understanding these principles provides a foundation for navigating the stock market. Now, armed with the basics, we examine the art of stock analysis. Think of stock analysis as a compass guiding us through the stock market's vast wilderness. It's a process that helps us understand a company's worth and potential. And there are two main types to consider: fundamental analysis and technical analysis. Let's start with fundamental analysis. Imagine you're a detective, sifting through a company's financial statements, looking for clues about its health and potential. You're examining earnings, assets, liabilities, and all the other financial aspects of a company. But it's not just about numbers. You're also considering the company's management, its competitive position, and the health of its industry. This is fundamental analysis, and it's all about understanding the intrinsic value of a stock. It's a long-term strategy, and it's ideal for investors looking for steady growth and dividends. On the other hand, technical analysis is like being a weather forecaster. You're not as concerned with the company's fundamentals as you are with trends and patterns in its stock price. You're looking at charts and using statistical analysis to predict future price movements. It's all about timing the market, buying low and selling high. This method is often favored by day traders and short-term investors who are looking for quick profits. Both of these methods have their strengths and weaknesses. Fundamental analysis can provide a deep understanding of a company's value, but it can't predict short-term price movements. Meanwhile, technical analysis can help you time your trades, but it doesn't tell you anything about a company's underlying value. So, what's the best approach? Well, many successful investors use a combination of both. They use fundamental analysis to identify undervalued companies with strong growth potential, and then they use technical analysis to time their trades for maximum profit. Remember, there's no one-size-fits-all strategy in the stock market. It's about finding the approach that works best for you, your goals, and your risk tolerance. These analysis methods serve as our compass in the stock market journey. With these tools at hand, we turn our attention to a particular stock, XYZ. Now let's delve into the fascinating world of company XYZ. A titan in its industry, this company has made substantial strides in revolutionizing its field. Over the past few years, XYZ has consistently proven its mettle by delivering impressive financial results and maintaining a strong market presence. As we begin our deep dive, let's first examine XYZ's fundamental analysis, a critical tool that provides us with a snapshot of the company's overall health. The fundamental analysis takes into account a variety of factors such as earnings, dividends, new products, research, and the like. Over the last fiscal year, XYZ's earnings have been on an upward trajectory, signaling a strong financial position. The company has also been generous in terms of dividends, which is a positive sign for potential investors. Furthermore, XYZ has been pouring resources into research and development, which demonstrates a firm commitment to innovation and growth. Next, let's move on to the technical analysis. This method is akin to weather forecasting, but for stocks. It involves examining patterns in market data to predict future trends. For XYZ, the technical analysis presents quite an interesting narrative. Over the past year, XYZ's stock has been showing a consistent upward trend. There have been occasional dips, yes, but the overall trajectory has been positive. The moving averages, a key indicator in technical analysis, have remained steady. This suggests that the stock is not overly volatile and has remained resilient even during market fluctuations. Another key component of the technical analysis is the volume of trading. For XYZ, the trading volume has been high, demonstrating that the stock is actively traded, and there's a keen interest among investors. By examining both the fundamental and technical analysis, we gain a comprehensive understanding of XYZ's stock. We can see that it has a strong financial foundation, strategic future plans, and a stable trading pattern. All these factors make XYZ an intriguing pick in the stock market landscape. However, it's important to remember that while analysis can provide us with valuable insights, it's not a crystal ball. The stock market is influenced by a multitude of factors, many of which are unpredictable. Therefore, any investment decision should be made carefully and always in line with one's financial goals and risk tolerance. So, has our spotlight on XYZ piqued your interest? Remember, the more you know about a stock, the better equipped you are to make informed investment decisions. And knowledge, as they say, is power. Our analysis of XYZ lays the groundwork for predicting its future performance. Prediction isn't magic, it's about understanding patterns and trends. Now that we have a good understanding of stock XYZ, let's look at how we might predict its future performance. When it comes to forecasting, we're not pulling numbers out of a hat. We're examining the company's past performance and market trends to make educated guesses. Think of it as connecting the dots in a larger picture. First, we look at stock XYZ's historical performance. Has it shown steady growth over the years, or has it been a roller coaster ride of ups and downs? A history of stable growth could suggest a promising future, while volatility might raise red flags. But remember, past performance doesn't always predict future results. It's one piece of the puzzle. Next, we consider the company's financial health. Are they bringing in consistent revenue? Is their debt manageable? Companies with strong financials are more likely to weather economic storms, which could bode well for their stock. We must also look at the industry in which stock XYZ operates. What's the outlook for this sector? Are there emerging trends or looming threats that could impact the company? For example, a tech company might be affected by new regulations or a breakthrough in technology. Then there's the broader economic picture. Factors like inflation, interest rates, and unemployment can all influence the stock market. A booming economy might boost stock XYZ, while an economic downturn could put pressure on its stock price. Finally, we take into account any upcoming events that could impact stock XYZ. This could be anything from a product launch to a change in leadership. These events can cause short-term fluctuations in the stock price. Now, you might be thinking, that's a lot of factors to consider. And you're right. Predicting a stock's future is complex, which is why many investors turn to professionals for advice. But even experts don't have a crystal ball. Predictions are not certainties. They're educated guesses based on available information. Sometimes they're spot on, other times they're off the mark, but they do offer valuable insights. They can help us anticipate potential opportunities and risks, allowing us to make more informed investment decisions. And that's the goal, isn't it? To make decisions that align with our financial goals and risk tolerance. Whether you're investing for retirement, a down payment on a house, or your child's education, understanding the potential future of a stock can help guide your investment strategy. So, while the future of stock XYZ isn't written in stone, by analyzing its past performance, the health of the company, industry trends, economic factors, and potential impactful events, we can get a sense of where it might be headed. While predictions aren't guaranteed, they offer valuable insights into potential stock behavior. So, keep your eyes open, stay informed, and remember, investing is a long game. Patience and diligence often pay off in the end. In the stock market, knowledge truly is power. Imagine navigating through a dense forest without a map or compass. Daunting, right? That's akin to stepping into the stock market without adequate knowledge. Informed decision-making is the compass that guides us through the labyrinth of the stock market. It's the difference between a profitable investment and a costly mistake. Stock analysis and predictions are our torchlights in this forest. They illuminate the path, helping us understand the terrain and alert us to potential pitfalls. Without them, we are left to the mercy of chance, and in the stock market, chance is a fickle friend. But what does being informed truly mean? It's not just about knowing the numbers, it's about understanding the story behind those numbers. It's about scrutinizing under the hood, studying the company's financial health, its management, its competitive landscape, and its potential for growth. It's about discerning the trends, recognizing the patterns, and predicting the future. Let's take a step back and think about the weather. We rely on forecasts to plan our days. We wouldn't venture out without an umbrella if rain is predicted. The same logic applies to the stock market. Stock predictions are our weather forecasts. They help us anticipate market movements, allowing us to plan our investment strategy accordingly. And here's the secret sauce. The more informed our decisions, the greater our potential for success. Making an informed decision doesn't guarantee a win, but it significantly tilts the odds in our favor. It empowers us to take calculated risks, to seize opportunities when they arise, and to weather the storms when they hit. Remember, every decision in the stock market is a step on the path to financial success. Each step can lead us closer to our goal or divert us off track. That's why it's crucial to make every step count. Informed decisions can make the difference between a lucrative investment and a costly mistake. So, arm yourself with knowledge, because in the stock market, knowledge truly is power. As we conclude, remember that the stock market is a game of strategy, not luck. In our journey today, we've delved deep into the intriguing world of stocks, shedding light on the mechanics of the stock market and how it functions. We've demystified the market, revealing it as not just a chaotic whirlwind of numbers, but a complex yet decipherable system governed by supply and demand, economic indicators, and company performance. We've also explored the art of stock analysis, a critical tool for any investor. We've learned that it's not just about following trends or listening to hot tips. It's about diligent research and careful consideration of factors like a company's financial health, its position within the industry, and the broader economic landscape. Our spotlight on stock XYZ illustrated these principles in action. We didn't just glance at its price and make a snap judgment. We examined its financial statements, considered its growth prospects, and looked at how it stacked up against its competitors. This comprehensive analysis helped us make informed predictions about stock XYZ's future, illustrating the power of informed decisions. This isn't about guessing or gambling. It's about gathering information, analyzing it, and using it to make strategic decisions. It's about understanding the risks, managing them, and seizing opportunities when they arise. Investing in the stock market isn't a get-rich-quick scheme. It's a long-term strategy that requires patience, discipline, and a willingness to keep learning. The market will have its ups and downs, but with a solid strategy and a clear understanding of the principles we've discussed today, you can navigate these fluctuations and potentially come out ahead. With these insights, you now have the tools to navigate the stock market and potentially turn a profit. Remember, the stock market isn't a gamble, it's a strategy.